Price reduction in some ways is our investment for the future and for capturing more patients. That wasn't a policy analyst, that wasn't a journalist. That was Novo Nordisk CEO Mike Doustdar on the company's earnings call. And that one sentence tells you almost everything you need to know about where this market is heading. Last week, Novo Nordisk reported its fourth quarter and full year 2025 results. This is part 2 of our 4-part series breaking down the earnings calls that matter in obesity medicine. Lilly and Novo are shaping this category in real time. Pfizer and Amgen are trying to break into it. Those are not equal positions. This week, we're going company by company, not to cheerlead, not to attack, but to listen carefully to what the executives are actually saying, to translate that into what it means for you and I, the patients. Hello, and welcome to the Downsized. If you're new here, welcome. If you're a returning viewer, welcome back. Before we go any further, I am not a doctor, not a lawyer, not a financial advisor. Nothing in this video is medical, legal, or investment advice. We work from primary source documents, earnings transcripts, investor presentations, regulatory filings, and we break them down in plain English so that you understand what is shaping your obesity care. My name is Christopher Durham. My wife Lorraine and I began this GLP-1 adventure in September of 2023. Between the two of us, we've lost more than 150 pounds. I started at 286 pounds. Today I maintain right around 185. We've paid out of pocket, we've dealt with denials, we've dealt with shortages. We have lived this. So when we talk about Novo's pricing strategy, their pipeline timing, their competition with Lilly, and their manufacturing confidence, we're not talking about abstract market theory. We're talking about the infrastructure behind our care. Now, to be clear, neither Lorraine or I have ever taken any of the Novo obesity medications. We've used tirzepatide. But if this kind of reporting helps you cut through the noise, like this video and subscribe to the Downsized. We publish every day, and this week we're going deep into all 4 major earnings calls. Now, let's zoom out for a minute. Novo reported 10% sales growth for 2025 and 6% operating profit growth. That's still growth, but it is no longer the explosive surge phase that defined the early GLP-1 era. The market is maturing, competition is intensifying, pricing pressure is real. Doustdar opened the call by saying, in 2025, we sharpened our strategic focus, doubling down on our core therapeutic areas of obesity and diabetes. That phrase, doubling down, matters. It signals concentration of capital, manufacturing, research, commercial focus, political strategy. Novo is not diversifying from obesity, it is anchoring itself to it. He also highlighted just how much obesity has transformed the company. He said, our obesity care sales have increased from 6 billion kroners in 2019 to 82 billion in 2025. That's not incremental growth, that is structural transformation. But the tone of this call was different from prior years. Executives acknowledged pricing headwinds in the United States. They acknowledged competition, they acknowledged supply constraints are easing, which means the next phase of this market will not be driven by who can simply make enough product. It will be driven by who can price, position, and scale most intelligently. And that is why that opening sentence matters so much. Price reduction is our investment for the future. If Novo truly believes that, then what they do next will define not just their quarterly results, but their legacy in obesity medicine. Novo's headline numbers only tell part of the story. The deeper story is in how the growth is shifting and where the pressure is building. Obesity care remains the engine. But when analysts pressed into the details, it became clear that the growth environment is tightening. Executives discussed pricing dynamics in the United States more candidly than in prior years. Rebates are increasing, contracting is more aggressive, gross to net pressure is real. The U.S. market is no longer defined by shortage-driven urgency. It is defined by negotiation. Management made clear that volume remains strong, but pricing is facing structural headwinds. The conversation also touched on the broader obesity penetration story. So how much of the market does Novo own? Despite the scale of sales, most eligible patients remain untreated. That gap remains the long-term opportunity. But the path to closing it is increasingly shaped by access agreements, reimbursement decisions, and policy environments, not just clinical efficacy. So it's about all the things around it, not simply how well the medications work. There was also discussions around geographic performance and currency impact. Novo operates globally, and exchange rate effects influenced reported results. While those accounting factors matter financially, the more relevant takeaway from the call was strategic focus. Doustdar emphasized that Novo has sharpened its priorities around obesity and diabetes. That sharpening implies resource concentration, manufacturing, regulatory sequencing, portfolio decisions. The company is concentrating its firepower where it believes it can defend leadership. At the same time, analysts questioned how Novo plans to maintain competitiveness as other companies expand supply and introduce new mechanisms. The executives did not deny the competitive intensity. They acknowledged it. But they framed Novo's advantage as scale, global reach, manufacturing depth, and a layered pipeline. In short, Novo is not exiting the top tier of this market, but it is now operating in a more contested space than at any point since GLP-1s redefined obesity care. And that context makes the pipeline discussion even more critical, because what comes next will determine whether Novo extends its leadership or slowly cedes its ground. Honestly, what comes next will determine whether Lilly continues to trounce it or Novo can gain share. It determines whether the up-and-comers take more of Novo's share or Novo wins. If the financials showed pressure, the product discussion showed where Novo believes it can regain momentum. And that conversation began with the oral launch that may reshape how treatment is delivered. On the call, Dave Moore addressed the approval and rollout of Wegovy in tablet form directly. He confirmed that FDA approval came on December 22, 2025, as we know, and that launch followed quickly thereafter. He said, "We were able to bring the first and best-in-class oral GLP-1 for weight management in the U.S. market on January 5th. That's a significant shift in the category. Injectable GLP-1s built the market, and oral GLP-1 has the potential to expand it. Moore emphasized positioning, stating, "The Wegovy pill is the only GLP-1 peptide formulated into a pill, delivering the weight loss efficacy of injectable Wegovy in a once-daily oral tablet." He also directly compared the efficacy data presented publicly, saying that in separate phase 3 data sets, the Wegovy pill shows around 35% greater reported weight loss compared to competing oral programs. The early prescription data shared on the call was notable. Moore said total prescriptions are around 50,000 for the week ending January 23rd, with around 45,000 of those prescriptions coming through self-pay. He added that the uptake is over twice that of any prior anti-obesity drug launches in the United States. That self-pay figure is especially important. It signals that oral therapy is not merely a clinical innovation, it is being structured as an access mechanism. But oral semaglutide is only one layer of Novo's strategy. CagriSema, the fixed-dose combination of semaglutide and cagrilinotide, remains central to defending the high-efficacy tier of the market. Martin Holst-Lang outlined updated phase 3 data showing that CagriSema 2.4 milligrams demonstrated superior A1C reduction in weight loss versus semaglutide 2.4 milligram. He specified that CagriSema achieved a superior weight loss reduction of 14.2%, with more than 40% of participants achieving over 15% weight loss and approximately 1 in 4 exceeding 20%. Regulatory timing was also addressed. Management confirmed that CagriSema has been submitted to the FDA in the United States, with expectations for a decision depending on review timelines. In addition, high-dose semaglutide 7.2 milligram has been submitted under the CPMV pilot program, with an anticipated FDA decision in the first quarter of 2026 as well. And then there's senagametide, formerly known as amycretin, a next-generation amylin and GLP-1 combination. Martin explained that it will move into major phase 3 programs beginning in 2026. We look forward to bringing it into an extensive phase 3 program called Ambition in type 2 diabetes and other indications in the second half of 2026. He said with the obesity-focused phase 3 program Amaze beginning in the first quarter of 2026, earlier data shows up to 22% weight loss at 36 weeks at higher doses. Novo also referenced UBT251, a triple agonist targeting GLP-1, GIP, and glucagon receptors. Sounds like retatrutide, with phase 2 data expected in the first half of the year in a Chinese population. In parallel, Novo's internal triagonist program continues in early development with additional data expected in 2027. When you step back, the structure becomes clear. Oral therapy expands the entry point, CagriSema strengthens the injectable middle tier, high-dose semaglutide refines the existing franchise. Next-generation combinations aim at the upper boundary of efficacy. They're building a portfolio. Same strategy as Lilly, they just have different drugs. Arguably, they're trying to catch up. The question is not whether Novo has assets in development. The question is whether the sequencing, timing, and pricing of those assets can offset competitive pressure already visible. So can they get them to market quick enough at a price that's good enough that they can actually compete with Eli Lilly? And that brings us to the final issue the call raised. What Novo must do now to protect its position. The pipeline sounds strong. The launch sounds strong, the science sounds strong. They've certainly come out of the gate heavy with oral Wegovy. But earnings calls are not marketing events, they are pressure tests. And once the analysts started asking questions, you could hear where the real friction began. The tension on this call was not subtle. Analysts were focused on three things: pricing pressure, competition from Lilly, and whether Novo's guidance reflects confidence or caution. Remember, Novo's guidance said we're shrinking. Lilly's guidance said we're growing. James Quigley from Goldman Sachs went straight at the heart of the issue. He pointed out that Novo's guidance implies low single-digit growth internationally and a sales decline in the United States, and asked directly how much of that was volume versus price. That competitor, of course, was Lilly. Karsten Munk-Knudsen did not dodge it. He said plainly the U.S. decline is driven by price declines, and explained that those price reductions are tied to market access investments, growth in the cash pay channel at a different price point, and the MFN, or most favored nation, impact. He acknowledged that price reductions are deliberate, and the key question is whether lower prices can be converted into higher volumes. It's early days, he said. We have built assumptions in. He pointed to the first 4 weeks of the Wegovy pill launch and said they were very encouraged. That phrase came up repeatedly: encouraged, optimistic, confident. But analysts kept pushing. Sachin Jain from Bank of America asked whether the guidance reflects genuine concerns about cannibalization and competition, or whether Novo is simply trying to avoid another year of earnings downgrades. That question reflects something investors have been feeling for months: volatility. CEO Mike Doustdar leaned into the volatility instead of denying it. He said, "We have all acknowledged how volatile and dynamic the obesity market is." He described the way Novo builds guidance, starting with Q4 run rates, layering in new data, including 4 weeks of pill data, and incorporating known headwinds, so the hard stuff coming at you, with loss of exclusivity in international markets and U.S. pricing pressure. He emphasized that Medicare reimbursement for Wegovy will begin around mid-year, but that the ramp will be gradual due to physician education and administrative processes. In other words, not a sudden unlock. The compounder question also surfaced. Richard Vosser from JP Morgan asked directly whether lower prices and the oral launch were slowing compounding volume. Dave Moore, EVP of U.S. Operations, responded candidly. He said, "We haven't seen a change yet. It's early days." He noted that 170,000 people are already on the Wegovy pill, and most of that is self-pay. He acknowledged switching from compounding could be coming, but said longitudinal data is still limited. Then came the CagriSema questions. Peter Verdult from BNP asked whether Redefine 4 would reveal the full weight loss potential, or whether Novo is effectively resetting expectations. Martin Holst-Lane responded carefully. He said Redefine 4 compares CagriSema to tirzepatide, Zepbound, and tests for non-inferiority followed by superiority, and that dosing was similar to Redefine 1. But he added something important. The full weight loss potential we will only learn when we do the full trial duration and the flexible dosing in Redefine 11. That's not the language of immediate dominance. That is the language of iteration. There was also pointed questions about sustainability of the Wegovy pill demand and how it holds up once Lilly's orforglipron arrives. Doustdar did not shy away from comparison. He said the obesity market has taught them that the number one criteria for a patient picking up anti-obesity medication is the magnitude of weight loss. He highlighted 16.6% weight loss for Wegovy pill in Oasis 4 and contrasted it with 12.4% from Lilly's oral candidate. If you round those things up, he said, you get to 17% and 12%. He added, if you ask pretty much any patient which one would you rather take, that's competitive positioning in plain language. On economics, Martin Holst-Lang confirmed that the Wegovy pill has a lower gross margin than the injectable, but emphasized that it is still an attractive gross margin and that the strategy is to expand the market rather than cannibalize existing products. And perhaps most telling in closing remarks, Doustdar addressing price directly. 2026 will be a year where we will face some headwinds, especially on the back of price declines. Then he reframed it. Price reduction in some ways is our investment for the future and for capturing more patients. That line matters because the tension in this call was not about whether obesity medicine will grow. It certainly will. It was about who wins in a market that is becoming more price sensitive, more competitive, and more exposed to policy change. Novo is choosing to lean into lower prices to expand volume. Lilly is leaning into manufacturing scale and pipeline depth. And analysts are watching every quarter to see which strategy proves durable. Patients are watching every quarter to see which medication they can afford. Because yes, efficacy is a great thing, but if I can't afford it, it doesn't matter. That is the backdrop heading into Pfizer and Amgen, the next two analyst calls we'll report on this week. They are still trying to enter a market that is already being defined by these two giants. And this is where it stops being an earnings call and starts being a defining moment. Because Novo Nordisk made something very clear in this call. They are deliberately lowering prices in the United States. CFO Karsten Munk-Knudsen said the U.S. decline is driven by price declines, tied to the investments in market access and the build-out of the cash channel. It's not accidental wording, it is strategic intent. So let's take that intent seriously. We know the facts. The Wegovy pill was approved December 22nd. It launched January 5th. It is now available in over 70,000 pharmacies. Early prescriptions hit around 50,000 in a single week, with the vast majority coming through self-pay. Novo says they are confident in the supply, they are pushing distribution, they are expanding access. Right now, the starter dose is positioned almost aggressively in self-pay. But if the goal is truly long-term market ownership through access and volume, there's a move sitting right there in front of them. Make all doses of oral Wegovy $99 per month, not just the starter. Not a limited time offer, all doses $99. At that level, you do not just compete with injections. You expand the category. You normalize GLP-1 therapy as accessible. You dramatically increase new prescription starts. You reduce friction in telehealth. You pull people out of gray markets and compound channels. And because Novo already has global semaglutide manufacturing scale and a strong gross margin profile, even acknowledging the pill has lower gross margin than injectable, they can still be wildly profitable on volume. They can still make a whole lot of money. That is how you turn oral GLP-1 therapy into the front door of obesity care. And then comes CagriSema. CagriSema is not a side project. Redefine 4 is head-to-head with tirzepatide. Redefine 11 incorporates longer duration and optimized flexible titration to unlock full weight loss potential. The science is serious. The ambition is clear. So when CagriSema launches, Novo faces a defining pricing decision. Do they go at parity with Eli Lilly's tirzepatide products, Zepbound and Mounjaro, so are they pricing it the same? Or do they price it below? If they launch CagriSema at a price that clearly beats Zepbound, they do not just compete, they reset expectations. They win on value, they win on access, they win on volume, and they turn Doustdar's words into action. His words are the only philosophy that matters if it shows up in launch pricing. Novo has the scale. They have invested heavily in manufacturing. We've seen the plants built all around across the country. API facilities are coming online. They have distribution, they have brand recognition, they have payer relationships. They can choose to maximize margin quarter to quarter, or they can choose to maximize reach decade to decade. They can own first-line therapy with $99 oral Wegovy across all doses. They can own the next step escalation by launching CagriSema below tirzepatide. Control the entry point, control the upgrade path, expand volume, build loyalty early, grow profitability through scale. That's how you define a category instead of just participating in it. And honestly, that's how you help more patients. It's how you build loyalty. So let me ask you directly, if oral Wegovy were $99 per month at every dose, would that change in access be meaningful to you? Or perhaps more interestingly, because many of you are already on these medications, think back to when you first started. If you walked into your doctor's office and your doctor said, hey, I can help you lose weight with a daily pill, up to 20% of your body weight in trials, probably more than that in the real world, and it's $99 a month, what would you have said? Would you have taken the pill and moved on? Because that's what happens with the vast majority of prescriptions, right? Okay, thank you. Yeah, that sounds like a great idea. I'll be happy to do it. So many of us are so deep into this conversation and we know so much about tirzepatide and semaglutide and all these things that we forget that moment when we were desperate sitting in a doctor's office and just needed help. And at $99 and a pill I have to take every day, that might be the help people need. If CagriSema launched at a price below tirzepatide, would that change how you view Novo? Or do you believe competition alone will bring pricing down over time? Put your thoughts in the comments. This is part 2 in our 4-part earnings deep dive. Lilly set the tone, Novo is responding, Pfizer and Amgen are next. 4 companies, 4 strategies, 1 future for obesity care. 1 future for building our health. Thank you for joining me. If you haven't already, please take a moment to like and subscribe. My name is Christopher Durham, and we are the Downsized.